Good evening. I am Professor Shirish Kulkarni from Faculty of Commerce, MS University of Baroda. Then I was Vice Chancellor at Sardar Patel University, Vallabh. Today I am going to talk on GST series, which we have continued since long. Today I will be talking on supply. It is a taxable event. The occurrence of event, then only the tax is levied. Imposition of tax. It activates to levy the tax. So that event is called as a taxable event. In other taxes also there are taxable events like earning of an income. It is income tax levied on income earned above the threshold limits. Similarly, here also we know from 1st July 2017 the GST has been levied, but it is merger of 17 indirect taxes in one. For example, there was central excise duty which was levied on manufacture of the goods. Similarly, there was a customs duty. The tax is levied when the goods are crossing the border of our country. That is, coming from outside India, the goods are entering. Then it is an import. Custom duty is levied. Similarly, when the goods are crossing the border and going outside the India, at that time also the custom duty is levied. Somehow majority of the goods exported are free of customs duty. Similarly, we had a value added tax. Earlier to that it was a sales tax, tax on sales. Tax on sales means there is a change in the ownership of the property or the goods. That is how the taxable events and different taxes are being shown. These all indirect taxes are merged into the GST except income tax. Income tax is a direct tax. Custom duty is indirect tax, but still it is not coming under the goods and services tax. So back to the taxable event. In different taxes, the taxable event I have stated to you. But when these 17 taxes were merged in one, there should be one taxable event. And that taxable event has been stated as a supply, which includes all these, maybe sale, maybe manufacture, maybe provision of service, etc. So that has been in one word, and that is the supply. Supply of goods and services attracts the goods and services tax. But again, question arises, when this supply will become taxable? First, when the supply is taking place by a supplier, let's say there are two parties, one a supplier of the goods or services and second party is recipient of the goods or services. So when the supply is made by a supplier for furtherance of his business, so he will proceeding his activities for the business only, whatever the business he has got. So then only this supply will become taxable. There can be deemed supply also. When we talk on supply, it is under section 7 of the Goods and Services Tax Act. Under section 7, there are three types of schedules related to supply. One, that supply, whether it is interrelated person, a friend is getting the supply, so will it be taxed? Whether it is supplied to the brother, sister, friends or anybody, that is interrelated person. So in case of interrelated person, the supply is taxable as per schedule 1. So this all schedules, schedule 1, schedule 2 and schedule 3. I have stated about you schedule 1. It will be tax. Whatever list is there in schedule 1, that all are attracting the GST. Schedule 2 is saying whether it is goods or services, it will be tax. And third schedule is totally exempt. So those goods supply which are listed in the schedule 3, they will not attract any goods and services tax. Then we come for the next, and that is there must be a consideration. Whenever the supply is taking place, in return there must be some price, and that price we are considering as a consideration. Whether supply of services or whether there is a supply of goods, consideration is there, and therefore it will be taxed under GST. Next, the territory should be taxable. So wherever the goods are being supplied, it must be taxable territory. That area should be under the GST Act. Let us say that when the goods are exported outside India, let's say USA, let's say UK, let's say Germany, our law is not implemented on that countries. So that is not the taxable territory. So there we cannot levy the GST. So levying GST, there must be a taxable territory. Then there must be, next point is, the person who is supplying, he must be taxable person. Then who is taxable person? The taxable person who is registered under the GST Act. So there is a 15 digits registration number which the person is having, and he is supplying the goods and services, then and then only GST will be levied on that supply. Again, there is a rate of GST. Let's say starting from 5%, 12%, 15%, 18%, 28%. So whatever rate of tax is there, it will be calculated on value of the goods or services. So we will call them as an assessable value. So that assessable value will attract rate of tax, and then we will get the amount of total tax. Now this tax is levied, but definitely it will be paid. Charging of tax is under section 9. So when supply is taking place, the GST is levied, then that GST is paid to the government. We know it is a dual taxation, dual tax. GST is a dual tax collected by central and state, both. So it is divided in two parts. So person who is paying the tax to the government has to be registered. That's what we have already stated. So supplier is a person who will make the payment of tax to the government. No matter he is collecting from his recipient, that is the buyer of the goods and services, from him he will collect and he will make the payment to the government. So this is small idea about the supply. Primary idea, initial idea about the supply I have stated to you. But in detail we will see later on, because it is in depth we have to understand what the supply is. Now it is goods and services tax. So what are the goods? Let us understand what the goods are. Under central excise duty, the goods were defined. In GST also it has been defined. Under section 2, subsection 51, goods are being defined. So those items which are movable, under central excise also the same thing was given. But in central excise there was movable and marketable. Now that marketable part is out, only movable part is there when The item is movable because the goods are sold from one person to another person, so it can be transported, shifted, given, so that goods are movable. That is important. Immovable cannot be goods. Let's say building. The building cannot be moved. That's why on building, even if there is a sale, there is a supply, but on building purchase or sale, no GST will be levied because it is not movable. Let us say there is something like attached to the land, just like a building. There can be grass, there can be crop, there can be tree. Can they be sold? Yes, there is an agreement to sale and they will sever, they will cut from the land and then they will be supplied. So in that case, they will become movable and GST will be levied on that. But in this supply of goods, money, can it be goods? No. Under GST, money and securities mean shares, debentures, bonds, they are not attracting the GST even if they are movable. So it is exempted, rather it is not imposed on. Then comes actionable claim. On actionable claim, when there is a gaming, gambling, betting, on that the GST will be levied. But let's assume when I have stated securities, money, there can be a service on it. But let's say first, what is service? Service is other than goods. So very simple. We understand the definition of goods, then automatically service definition also will understand. What is not goods is all services. So when I said money, the tax is not levied on money. But when money has been converted into other currency, let's say US dollar, rupee is converted into rupee dollar, or rupee is converted into, let's say, UK pound. Whatever currency is there, rupee is converted into, there will be some commission, the brokerage will be there, so on that brokerage there will be a GST levied. Similarly, when I said securities, no GST is levied on securities, yes, but that securities are transferred, then in that case there is a brokerage. In the stock market also we know the brokers, and that brokers levy their commission along with the tax. So that commission is under the GST. But if money, I have stated conversion of it, but money is deposited into bank, then in that case no GST would be levied. If money is withdrawn from the bank account, there could not be any GST levied on it. So deposits and withdrawals from the banks, GST is not levied even if there is be considered as sale. Promissory notes also, there is no levy of GST. So like that, some of the part on supply, I have tried to make you understand supply is a taxable event or incidence of tax. Occurrence of that event, GST is levied, and that is what is the supply. Thank you. Here I stop.